Most free indicators are trash, but what if I told you I found one indicator that doesn't just give you precise entry and exit signals accurately, it also detects divergences that reveal hidden reversals before they happen. And the best part is, it's completely free, but outperforms premium indicators that charge $500 plus monthly. In this video, I'm going to reveal this free indicator that gives you both entry and exit signals, show you how to detect hidden divergences, and give you a complete strategy that outperforms any paid alternative. Let's get into it. First, head over to TradingView and pull up any market you want. I'm using the 1-hour time frame on Euro-Dollar, but this works perfectly on any time frame, any market. Click on Indicators and search for Standardized PSAR Oscillator. Make sure you select the one by Algo Alpha. What sets this indicator apart is how it transforms the classic parabolic SAR into a sophisticated oscillator with entry-exit precision that beats premium tools. When you add it to your chart, you'll see a color-coded oscillator at the bottom that changes between green and red based on trend direction. But here's what makes this free tool better than expensive alternatives. First is the Enhanced PSAR Foundation, which starts with traditional PSAR calculations but applies advanced standardization using an EMA of the high-low range, normalizing values across different market conditions. Second is the Weighted Moving Average Smoothing. The standardized PSAR gets smoothed using a WMA to eliminate noise while maintaining responsiveness to real trend changes. Third is Automatic Divergence Detection, when the oscillator compares pivot points in price action with oscillator pivots, automatically identifying hidden divergences that signal potential reversals. Fourth is the Zero-Line Oscillator format, which presents everything as a clean oscillator with precise zero-line crossovers for trend changes. Most traders struggle because they rely on random signals without a clear system. That's why we focus on structured strategies and automation, so you can study how these tools work step by step, without guesswork or emotions. If you want to learn more and see exactly how these strategies are applied in real market conditions, click the first link in the description. Disclaimer: this is for educational purposes only. Trading carries risk, and no strategy can guarantee results. Now, to get maximum accuracy from this free powerhouse, we need to optimize the settings for your specific trading style. Double-click the indicator to access the settings panel. You'll see the PSAR start value that controls the initial acceleration factor when new trends begin. For day trading, 5 to 15-minute charts, set this to 0.02 as you want responsive signals for quick moves. For swing trading, 1 to 4-hour charts, use 0.015 as this provides smoother signals for long-term positions. For volatile markets like crypto, set the PSAR increment to 0.02 for faster trend adaptation. For stable markets like forex majors, use PSAR increment of 0.015 for reduced noise. This sets the maximum acceleration factor. Next, keep the PSAR max value at 0.2 for most markets and set standardization length to 20 for balanced smoothing across all time frames. Here's exactly how to generate perfect entry plus exit signal with this powerful indicator. For long entries, wait for the oscillator to cross above the zero line while turning green. This signals the standardized PSAR has shifted from bearish to bullish bias. Next, you want to confirm with price action. Look for bullish candle patterns or breakouts above resistance. Then, enter long at the next candle open after the zero line crossover. For short entries, wait for the oscillator to cross below the zero line while turning red. This signals the PSAR has shifted to a bearish bias with institutional confirmation. Confirm with bearish price action, which shows as rejections at resistance or breakdowns below support. After that, enter short at the next candle open after the bearish crossover. For trend change exits, you want to exit when the oscillator changes color, green to red for longs, and red to green for shorts. This provides early warning before full trend reversals occur. For divergence exits, watch for automatic divergence signals, that is, triangular markers that appear when price and oscillator diverge. Before I show you the next strategy, remember this: learning indicators is one thing, but applying them within a structured process is what really matters. That's exactly why we've created a place where you can review these strategies, see live examples, and study them in real market conditions. Just click the first link in the description whenever you're ready to explore further. Disclaimer: this is for educational purposes only. Trading carries risk, and no strategy can guarantee results. Now, different markets require different settings for accurate signals. For forex pairs, especially the majors, set PSAR start to 0.015 and PSAR increment to 0.015, then use standardization length of 25 to smooth out central bank intervention noise. Focus on zero-line crossovers rather than divergences as forex trends are more persistent and reliable. For crypto, bump PSAR start to 0.025 and increment to 0.02. As crypto needs faster acceleration for explosive moves, set standardization length to 15 to catch rapid trend changes, and pay special attention to divergence signals because crypto shows excellent divergence reliability due to whale manipulation patterns. For stocks, set PSR, start to 0.01 and increment to 0.01 for ES and NQ futures. Use standardization length of 30 for smoother signals in algorithm-heavy markets. Divergences work exceptionally well during earnings seasons and FOMC periods. Also avoid signals during first 30 minutes of regular session due to opening volatility. For gold, use PSR, start of 0.02 and WMA length of 8 for faster response to news events. Divergence detection is critical here as commodities show strong divergence patterns before major reversals. Thanks for watching, and I'll see you in the next one.